Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Peter Cohan, Forbes senior contributor and author of Brain Rush, How to Invest and Compete in the Real World of Generative AI. Peter, thanks so much for joining me.
Great to be here. Thanks for inviting me.
There has been a lot of chatter about the AI bubble, if we're even in one, and if so, when is it going to pop? And this conversation really came to a head this week over Nvidia's Q3 earnings report. It was better than expected, beat expectations, and this seemed to quell bubble concerns, at least temporarily. But massive stock market gains were then soon wiped out, and the fears materialized once again. So to start off the conversation, what are your thoughts on the whipsaw that we've seen in the last 48 hours?
Well, it seems to me that it has nothing to do with what Nvidia did, and I wouldn't call it people worrying about the bubble so much as I think people were expecting that the Fed was definitely going to cut rates another 25 basis points at their next meeting. So this was, in my view, a macro reaction because the jobs report came out. The jobs report was better than expected. It seemed that the consensus was that now all of a sudden the Fed is not going to cut in December. And then that meant immediate risk off. Everybody was selling everything. And so I think that's actually what happened. But if you actually analyze what Nvidia reported, it becomes pretty clear that they did a fantastic job. There is a bubble, I will agree with that, but the bubble is not about to burst.
Dan Ives, he's an analyst with Wedbush, and he spoke glowingly of Nvidia. He talked about the bubble, and he said that this was a golden quarter for Nvidia with demand massive and well above street whisper numbers. And he also added this, that these numbers validate the AI revolution is still early days and send the bears back into hibernation mode. So what is your response to that? What do you make of where we are in this AI revolution?
Yes, I mean, I lived through the dot-com bubble. And I've written articles about this. And what's really interesting is that one of the things that really stands out to me is that during the dot-com bubble, there were two different things than what's going on right now. First of all, there were about 2,400 companies that went public during the 4 or 5 years of the dot-com bubble. So far, I don't know if there's been a handful, maybe fewer than 4 or 5 specifically focused AI companies that have gone public. So very few companies have gone public. Second of all, the big thing that caused the collapse, or one of the big things that caused the collapse of the dot-com era, was all this money being borrowed to build out fiber optic capacity, and that caused a number of very large companies, heavily indebted, money-losing companies, to to go bankrupt because they couldn't pay their debt. And what I see now is some debt being used for some companies, and I think the market is treating those companies differently than the rest of the companies. So most of the big players in the AI business are cloud services providers. Microsoft, Google, Meta is sort of building a lot of cloud services, AWS, Amazon. And then Oracle came in. Now, Oracle came in there, and they suddenly announced about a month ago some hundreds of billions of deals. And then when you look at it, you realize that those deals are being done with companies that are losing money, like OpenAI, and they're borrowing money. So this is a company that is borrowing money, and I think the borrowing of the money is the thing that I think investors should be keeping their eye on. If all this capacity to build out the demand for generative AI on cloud services providers, if that money is being financed by borrowing, then that is a sign of trouble. So we have to keep our eye on the amount of money that's being borrowed to build these AI cloud services platforms. And so that's the real danger here. But the scale of that borrowing is right now not close to being about to burst. And if it did burst, it would have a very limited negative effect. If you look at NVIDIA has incredible profit margins, generates lots of cash, is making lots of investments to sort of boost the overall ecosystem, and to some extent, they are buying demand by using this money, but they're also making investments. And if those investments collapse, they have a $4 to $5 trillion market capitalization. Those investments are small in proportion to the overall size of their market capitalization, their profitability, and their cash flow. So therefore, that is another thing that's really good and better about this AI bubble than was going on during the dot-com bubble, when you had all these companies that were going public with no revenue, and there was very little profit to support all of it. I mean, you had these 2,400 companies that went public. There are two big companies that remain from that, now 20 years after or 25 years after the dot-com bubble burst, namely Amazon and Google.
Do you think then that people have almost this PTSD when it comes to bubble because we've lived through the dot-com bubble bursting in 2000, the housing bubble of 2007, 2008? Do you think that that these concerns are perhaps overblown because when they hear that, they remember those, pretty dark times?
Yes, I think that it is somewhat overblown. I think the problem is that people are feeling the emotions, but they're not looking at the numbers. And the numbers that they need to look at have to do with the amount of money being borrowed compared to the amount of equity in the companies that are borrowing and the amount of cash in the companies that are borrowing the money. And what caused the collapses and the big downward trends were basically too much borrowing. And the best example of this was the 2007-2008 collapse when subprime mortgages were securitized, so they were owned around the world. And so, the values collapsed around the world. There was not enough equity to support that. And that is not happening right now with the generative AI situation. And it didn't really even happen as badly during the dot-com bubble. It did affect some publicly traded companies that were building fiber optic networks that borrowed all this money, were losing money. The dot-com collapse happened in March of 2000, and there was no more money to invest in these companies.
I like what you said about people are feeling their emotions and they're not looking at the numbers. And the numbers in Nvidia's Q3 earnings report, I mean, they were stellar. They were better than anticipated. Revenue is up year over year by over 60%. When you see this earnings report, what does that indicate to you about the future of the AI boom?
Well, I think it has a lot of legs. I definitely think it has a lot of legs. One of the things that I've been skeptical of is whether there is this thing which I call the killer app. I think you're probably familiar with the concept of the killer app. I mean, probably before your time, when PCs first came out, people didn't know why to buy a PC, and then along came the electronic spreadsheet, and that was the killer app. And word processing software. That's why you needed to buy a PC. And maybe you remember the iPod. The iPod initially was not selling much, but then along came the iTunes store, and that became the killer app. The revenue of the iPod more than tripled after the iTunes store came out, and that was the killer app for the iPod. And so the question is, what is the killer app for AI? I mean, I was at a conference last week in San Francisco called the Cerebral Valley AI Conference, which was absolutely fantastic. And I was in this discussion group, and I was asking the question, what is the killer app for AI? And there were maybe 15 people around this little circle, and basically nobody answered the question. There was no answer to the question. So I find that interesting. I mean, I've seen research from MIT that says that 95% of AI experiments or AI pilots have not generated any meaningful return on investment. So ultimately, this whole thing has to demonstrate it can generate a return on investment from the companies that are buying the services of building and training AI models from these cloud services providers that are making all this investment. If that does not happen, then eventually the companies are going to stop buying all those cloud services and stop subscribing to all these AI chatbots. So that's a bit of a question in my mind. However, having said that, when I was at this conference, I saw many companies that were growing very fast, had lots of revenues because they were providing real value by wrapping ChatGPT and these AI chatbots into industry-specific knowledge of how to use that technology to make companies able to operate more efficiently because of the ability, for example, to read through and digest and summarize hundreds and hundreds of pages of documents very efficiently. That to me may be the killer app of AI, is the ability to kind of save huge amounts of time in just going through so much data, so many documents, and figure out what it means and figure out what to do about it much more quickly. So it basically makes people much smarter, much faster. It's also great for coding. It definitely allows people to write code without having to know how to code. They can do vibe coding, which essentially I did some vibe coding myself. There's this company called Replit, and they were there, and I used Replit about a year ago to build an app that would allow me to imagine what it would look like if I put a piece of furniture from a catalog into my living room. And I just described the concept, and it created the app. So this is vibe coding. This is something that makes it possible to do things with software without knowing how to write all the code.
And when ChatGPT was introduced in 2022, I feel like that's really when the AI conversation exploded into more of a national discourse, and people felt usually one of two ways about it. Oh, this is really exciting. This is going to make my life easier. Or oh my God, this could potentially steal my job. And I like what you said about the return on investment, because while ChatGPT is massively popular, it's not really a moneymaker. So when do you think these companies will see the return on investment?
Well, I mean, if you look at a company like Anthropic, which makes Claude, they have corporate clients. And corporate clients, I think, are going to be willing to pay more. And so that could make it a company that is going to be cash flow positive. ChatGPT is expecting, OpenAI is expecting to lose billions of dollars until, I don't know, 2029. Having said that, I'm kind of a student of, I teach about high-tech companies and high-tech growth. And so, I've written about how Google, for many years, for like 2 or 3 years, Google was giving away that search, the search bar had no revenue coming in. And their investors said, well, figure out some way to make money off of this. And they did. And, now they're, very profitable using that essentially the same thing. So what I'm trying to say is that it's possible for these companies, if they have the venture backing, to continue to operate at a loss and delay figuring out a business model. And then sometimes it's possible for them to figure out a way to make money off of what they're doing. So I do think it's conceivable that the same thing could happen with OpenAI. They could figure out some way to do advertising. I don't really know what the answer is. Obviously, if I knew the answer, they'd make me CEO, and that's not happening anytime soon. So but I do think it's possible that it could happen, that they could figure out a business model that would actually make it a profitable company. But I don't know what the answer is now.
I think we're at this really exciting time, right? Because everyone says this is a paradigm shift. The future is AI. There's the term AI revolution. But when you're thinking about that future, what exactly does that really look like?
Well, you know what? It's actually, in some respects, a scary future for people who are in college right now. I have to say that, as a professor, and I've been working on thinking about the future of higher education in my role there at Babson College. And one of the things I've noticed is that there's an increase in the unemployment rate of people who go to college over the last couple of years, because a lot of companies are saying, I don't need to hire entry-level people because I have AI that can do their jobs. Now, they're saying that. I don't know if that's true in all cases. One thing I will say is that any company that hopes to develop the next generation of leaders is going to have to hire young people and develop them. So maybe they don't see a future. I don't know. But one thing I will say is that I talked to the CEO of a company who came to my class on Tuesday, and he was telling the students that the students need to become very good at using AI before they enter the workforce in such a way that they can essentially do the job of more than one person. They can basically be much more productive and add a lot more value at a much higher level than a typical entry-level person. And having been somebody who started experimenting with AI, with generative AI, as you mentioned, ChatGPT came out about 3 years ago. I started using it as I was working on my book a few months after it came out, and it's really improved a lot. And I can do a lot more than I could like a year ago. It's really improved a lot, and I find that it is enabling me to think about things and do things that are much more interesting and do it much more quickly. So as long as people are using it and finding ways to make it valuable, I think that they will be able to find jobs. So I think what you're going to see is people doing jobs that are much more interesting and they're basically augmented by the use of this technology. But if you just ignore it and hope it will go away, I'm afraid people like that may find themselves in a less compelling to employers than people who are using it. I know it's a bit of a cliche, but I definitely think that real CEOs are viewing workers that way. Can they enhance themselves? Can they make themselves more than a traditional person who would just go in and do entry-level work by using this technology? And people like that are going to make the company more valuable. Ultimately, what drives value in our economy, and this is something I've been studying for decades, is whether a company can, simply put, exceed analyst expectations for growth every quarter and raise guidance. In order to do that, you have to invest in new growth curves. And AI can help people create those new growth curves. And to the extent that that happens, companies are growing faster, getting bigger, and becoming more valuable and attracting capital. And so that is a cycle that can continue to happen as long as more and more people figure out how to use AI to solve fundamental business problems in a good way.
And I think it's touching almost every industry. And if employees don't adapt, they're probably going to be left behind. I mean, this future, this revolution is moving at such a rapid pace. And there was so much emphasis on Nvidia's earnings report and what that was going to be. And like we've been talking about, it exceeded expectations. And the CEO of Nvidia, he said that essentially the whole world would have fallen apart if the earnings report wasn't good. Do you think it's fair that there's that much emphasis on their earnings report and that this is almost a signpost as to how people should feel about AI?
Well, the way I look at it is, and this is something I wrote about in my book, Brain Rush, actually, Nvidia was the company that made me think this is a fantastic opportunity. This is like the dot-com era. You know, I wrote 3 books about the dot-com era, and I saw Nvidia's earnings report in May of 2023, and they had this huge growth forecast after a drop in revenue in not a very good quarter, but the forecast was so good that the stock started to go up. And as soon as I saw that, I said, I know ChatGPT was just introduced about 4 or 5 months ago. This is telling me that this is real. And so essentially there are 2 companies that are sort of, if you ever, this time of year, there are these geese that are flying south. So you see these V's up in the sky. And the geese at the very front of the generative AI migration are basically Nvidia and OpenAI. Those are the 2 leaders of this whole thing, and only one of them is public. So that puts a lot of weight on Nvidia and on Jensen Huang, who is absolutely, in my mind, one of the greatest leaders of all time. I mean, he is just amazing because he started this company and he keeps inventing new growth curves, new ways that the company can grow. So the company comes out with these new chips, like the black, what is it called? The Blackwell chip. That's it. I don't know why they call it Blackwell. Blackwell chip. Like last year, they were sort of struggling with getting the kinks out. Now it's going really, really well, and they're coming up with new versions of this chip, more powerful versions of this chip to maintain their 90% market share. The demand is still extremely strong. They're able to execute and their basically their current business and invest in new growth curves. And to me, that is the way that you maintain high expectations beating revenue growth. And the rate of growth that this company has achieved for a company of this scale, I don't think it's ever happened in business history that a company this size has been able to keep growing so fast. And that is a testament to Jensen Huang. So a lot of the world is dependent on him.
And he is someone who has waved away the talk and the chatter of the AI bubble. And I know that you think that we're nowhere near it popping. So specifically today, what are you looking out for next?
Well, I mean, I think the thing that I find really interesting is at this Cerebral Valley AI conference that I went to, there were a lot of companies that I had never heard of before that were now worth, in the 9, 10, even hundreds of billions of dollars in private market value, with hundreds of or tens or hundreds or 200 or $300 million in annual recurring revenue, significant companies that I didn't even know about. And they're generating revenue because they're using AI to solve real business problems. And for the most part, they're in very specific market segments or very specific industries. For example, there was this one company that I saw, which I was particularly impressed with, called Harvey, which is probably named after Harvey on Suits. I don't know if you ever saw that show Suits before, but anyway, basically it's a firm that uses AI to help lawyers do their corporate legal work much more efficiently. Things like merger due diligence, and other activities that are very document intensive. And there's all these specific rules in different places in the world, and you're doing a global M&A, and basically they're able to combine legal expertise in sort of the mergers and securities area with ChatGPT. It was founded by a lawyer, and basically it's doing amazing business. It has 800 customers, 100 million in annual recurring revenue. The valuation is something like $9 billion. And there are companies that are like that in different industry segments that I saw there. So I think this is sort of the future, is figuring out how to use this technology to create real value for businesses, and get people to pay you for it. And so I think it's becoming, I'm beginning to see the glimmer of the answer to the question of what is the killer app for generative AI. And if that happens, it extends the boom, I think.
And as we get closer to that answer, I hope you can come back on, break it down with me, and talk all about it. I mean, this landscape is ever changing, and there's so much to discuss. So I hope we have plenty of conversations in our future. Peter Cohan, thanks for the time. You're welcome back anytime.
Well, thanks for the invitation. I will take you up on it.